So, hello everyone, welcome back to Pocket Fixers podcast. My name is Tanisha, your host, with the aim of making complex money topics simple and accessible. Today, we have a very special guest with us, Andy Shaw, who is a policy officer at the Institute of Money Advisors. And today, we're here to discuss kind of general money advice, what is a money advisor, and then also a bit later on, we'll kind of get into debt and different debt solutions. So, Andy, if you'd like to introduce yourself to our listeners, please.
Yes, hi, Tinisha. Yes, as you say, my name's Andy Shaw. I'm policy officer here at the Institute of Money Advisors. I've been in this role for about 2 years now, just coming up for 2 years. Prior to that, I was a debt advisor in a large national debt advice organisation. So hopefully, I know what I'm talking about when it comes to debt and all of the things that the money advice profession can do to help your listeners and other people who might need our help.
Yeah, brilliant. Well, I'm looking forward to it. It should be a good episode. So first off, I just kind of just get an overview. Who are money advisors, and do they have certain qualifications they need, or can anyone pretty much get into it?
Yeah, it's a really good question, actually. Yeah, so when we talk about money advisors, we typically mean people who are giving advice on debt, and that's a specific kind of activity that's regulated mostly by the Financial Conduct Authority, who your listeners may have encountered before, when because they're the
Hmm.
same people who regulate banks and other kind of financial institutions. So money advice is about helping people typically who have debt problems to sort those out in one way or another, whether that's about repaying your debts or finding other ways to deal with them. And I think we'll talk a little bit about some of those options a little bit later on
Yeah.
in the podcast. In terms of qualifications, I mean, there's no kind of set qualification that you have to have in order to give advice on debt. At the IMA where I work, we offer a debt advice qualification, the Certificate in Money Advice Practice, and that's kind of the gold standard for people in this profession. If they
Mhm.
have that, then that they really know their stuff, and that they are competent and qualified to do the job. But not everybody has that, and there are many ways to gain the kind of knowledge and experience that you need to be a competent debt advisor.
Okay, very interesting. So, would you say that debt advisor and money advisor are kind of interchangeable? Are they pretty much the same thing?
Yeah, they are. I mean, neither of them are a kind of a protected term in the same way that like a financial advisor might be, which is somebody who helps
Right.
you with like investments and that kind of thing. But yes, money advice, debt advice, very, very similar thing. And generally speaking, yeah, people will refer to themselves as one or the other or both.
Yeah. Okay. Interesting. And say someone does want to set up a session with a money advisor, what does a typical session look like for them?
Yeah, so to a large extent, it's dependent on what you, the client, need, and that's the
Yeah.
term that we tend to use in debt advice. Is we talk about clients.
Hmm.
So typically, you'll come to a debt advisor, and you can have a sort of a face-to-face appointment with somebody. You can go online. You can speak to somebody over the phone. Um, and they'll talk to you about your financial situation, and they'll try and complete some kind of income and expenditure statement with you, so understand a little bit more about what your income is, what you have to pay out on your kind of day-to-day essentials, and what you owe
Hmm.
in terms of debts, whether that's things like credit cards and loans, or whether it's like your household bills you're behind with energy, rent, council tax, that kind of thing. Money advisors will deal with all of those things, because once they've got a picture of your finances, then they can start using that to think about what the best options are for you, whether you make arrangements to repay those debts, whether you look at more uh, trying to write them off in some way. It really depends on your circumstances, but kind of the first stage of that process is always to do a bit of a fact find and understand what your situation is before they then move on to give you advice.
Okay, yeah, that's handy to know, and especially with iHub being an income and expenditure kind of company, so I completely understand that and how important INEs are. So if someone's listening to this and thinks, after we've discussed it and thinks, I think I could do with a money advisor or a debt advisor, how would you advise someone finding like the most like reputable money advisor?
Yeah, this is really important because there are quite a lot of organizations out there who purport to provide money and debt advice, but maybe don't do it in the way that we would like. They're trying
Yeah.
maybe to funnel you down the route of specific products, which might not be the best ones for you. So finding the right advisor for you is really, really important. A really good place to start actually is the Money and Pension Service, MAPS, who you again may have encountered previously on the podcast. They fund a lot of debt advice in this country, and they have a search tool on their website, so you can put your address in and they will bring up services that are either local to you, so in your area that are giving advice, or the kind of the reputable national services that they fund as well. And that's a really good starting point, because it means that you know that their service has been accredited to a particular standard. You know, MAPS, the funder, who are a part of the government, effectively, they're part of they work with the Department for Work and Pensions. They've given them, you know, the mark to say this is good enough to be on our website effectively. So that's a really good place to start.
Okay, that's but I'll link that below as well, so
Thank you.
so people can find it quite easily. So the reason why I kind of wanted to do this episode was because I think there are a lot of like opinions and often misconceptions about money advisors and debt advisors out there, that a lot of people do have. So I've done a bit of research, found a few, and wondered if we could kind of address them, if that's okay. So you kind of addressed one of my first ones earlier when you were kind of defining it. So some people, I think, have mistaken debt advisors for financial advisors. So someone said, you know, they're only for the rich and wealthy who want advice on kind of how to invest. So I guess for that one, we'd just say that's a financial advisor, and that's kind of separate to what we're talking about today.
Yeah, absolutely.
Yeah.
Yeah.
Yeah, brilliant. So the first one, kind of linked similar to that, but on the other end, was someone thinks that money advisors are only for people who are in severe debt and those who are unemployed slash on really low income.
Yeah, that's not the case at all, Tanisha. You're right, and I think, you know, typically a debt advisor's caseload, a lot of people who come to seek debt advice will be in those categories. You know, they will have a low income, they will have disabilities, they'll be, you know, in financial difficulties, one way or the other. But actually, you know, anybody who has any kind of debt, the real sign that you might need money advice is if you're having difficulty paying it, and you know that could be a very small credit card, it could be all of your household bills, or anywhere in between, and all of those things are kind of suitable for debt advice. And you know, we'd be sort of more than happy to help, whatever the size of your problem, really.
hmm Okay, that's very good to know. And some people are afraid, you know, they've got maybe mental health where they've got like really bad anxiety, and they're afraid that someone's going to judge them or judge their finances, especially like you said, if you're doing a full deep dive in income and expenditure statement. So what would you say to that?
Yes, and I understand absolutely. A lot of people will be worried about that. And I mean, there's a couple of points to make there, I suppose. Firstly, you know, the whole point of debt advice is that it is non-judgmental. Okay, we're
hmm
here to help you out of whatever situation you're in. It's not really um, up to us how, you know, how that happened. You will very often be asked, how did you get into this situation, because it will help to understand, firstly, you know, what the problem is and what options might be available to you, but secondly, um, you know, how to prevent it from happening again. Are there other services, other help that you might need to kind of bring you out of that situation? So you might be asked about it, but it won't be on a kind of judgmental basis. And secondly, if it is something that you're really concerned about, then some of the national providers do allow you to seek advice anonymously. So you don't necessarily have to give them your name and personal details. You'll still have to go through that, you know, income and expenditure
hmm
process, but you don't necessarily have to tie your identity to that. So there are lots of options if you're worried about that. And you know, that might not just be about, you know, people being worried about people judging them. It could be, for example, if you're in a domestic violence situation, or a financial economic abuse situation, and you're not ready to disclose your identity, then doing it anonymously might be the right way for you, and the option is there if you need that.
Yeah, that I didn't know that at all, so that's really handy to know. I think as well, talking about things and kind of podcasts like this, being like bringing it to the surface and telling people like about what's available, hopefully helps like kind of diminish that tabooness and um
Definitely.
yeah, hopefully, fingers crossed. So another one that I've seen online is that some people think that as soon as they go to a debt advisor, then they can just instantly fix their problems. They're kind of like, right, I've done that step, now I'm like, that's me done with it. So what would you say to that?
Yeah, and sometimes that's not the case, unfortunately. Sometimes there isn't necessarily a kind of a quick thing you can do that will immediately fix everything. Sometimes it does take longer in terms of managing your finances over a longer period to get them back on track. Debt advisors can't prevent that, but they can, of course, make that process easier and help you through the steps that you need to take. And in
Mm.
terms of kind of making decisions for you, as I mentioned at the very beginning, most debt advisors are regulated. They can't make decisions on people's behalf. They can only advise you on the best course of action to take. But ultimately, you, as the client, retain that ultimate control, and you can choose what path you want to go down.
Yeah, okay. And then this the last one, and this is something that we've kind of encountered at IE Hub because we're like free for customers to use, and people often think, like, what's the catch? And people don't realize we're funded by other means. So I guess similarly with that advice, some people might think, it's too good to be true. Like it's free. Like what are they getting out of it? Are they going to try and sell me certain financial products? Like what's the catch? So what would you say to that?
Yeah, and I mean, I suppose the first point to make there is that not all debt advice is free. Okay, there are
Yeah.
organisations out there who will charge you for that, whether that's upfront or kind of as a percentage of what you pay later on.
Hmm.
From the IMA's point of view, where I work, all of our members who are debt advisors do work in the free sector, so there is an awful lot of free advice out there available for you. But yeah, not everyone is working on the same basis.
Hmm.
Um, but for those of us who are in the free sector, yes, okay, what's the catch? Why are you doing this? What's in it for you? And as you say, actually, generally speaking, we're funded by other means. I mentioned the Money and Pension Service earlier as one of the big funders, government funding effectively. Um, and the idea that you're kind of financially incentivized, I guess, to sell certain products, that's not really a thing in money advice anymore. And that's maybe how it differs from some of the other services that I was mentioning earlier on that are maybe purporting to be money advice that aren't. Those kinds of models where you get paid based on how many of a particular product you sell don't really exist in money advice and can't exist because of the way that we're regulated. So it's about knowing that and having the confidence to trust that you're involved in a sector where there aren't those kind of financial incentives for people. They are
Yeah.
going to do what's best for you, the client, and not what's necessarily best for their own pocket.
Yeah, yeah, definitely. And so you touched on there are like paid debt advice out there. And what would you say the difference is between, the free and paid? Like why should someone ever pay for it, or what's your take on that?
Yeah, we would say no, of course, that there is no need to pay for debt advice. And the reason for that is because we are all regulated in the same way. Okay, we are all under the same auspices. So we all are held to the same standards. Um, and what that means is that you won't get a worse service by going for free than you would if you paid for something.
Mm.
So, what one of the kind of the conventional ways of dealing with your debts is to pay them off on a sort of a monthly basis on an amount that you can afford, and that money gets shared amongst the people that you owe money to.
Mm.
And of course, the free debt advice firms will send all of that money to the people you owe money to, and the paid for firms will maybe take a bit of that, which will be agreed with you in advance. Of course, it shouldn't come as a
Mm.
surprise to you, but what that means ultimately is that it takes you longer to pay your debts back because some of that money you're paying is not actually going to reduce the amount that you owe. And really, the only difference there is that the organization that's helping you, they're funded differently. Some of them are
Hmm.
funded by external means, and some of them are funded by the payments that you make, and that's the only difference.
Okay. Yeah, well, I mean, if there's free options out there, you may as well go for the free options, isn't it? Just to kind of, like you
Absolutely.
said, get the pay off quicker.
Yeah, definitely.
So 100% agree with that. Are there any other misconceptions that you know about that you kind of like to address before we move on?
I suppose that because of the way that many money advisors work, work in community settings, very often, rooted in the communities that they serve, there is a perception that maybe, they're a little bit radical and they're kind of not, not tuned into the kind of the society that we live in, and particularly, they're all about trying to help people avoid their debts and stick it to the man and that kind of thing, which I think is
Mm.
is not necessarily the case. Okay, yeah.
Yeah.
Again, we work within this framework of regulation. We're very much part of the the financial services industry as a whole, if you like. It's not about trying to help you avoid your debts. We will help you, of course, if there's money that you think you don't owe for one reason or another, then we can help you explore that.
Hmm.
Definitely. But it's not about getting people out of paying at whatever cost. It's about making sure that you are kind of, using your legal rights that you do have. But ultimately, if you owe the money, then we will help you deal with that one way or the other. We won't just tell you to bury your head in the sand and run away from it.
Yeah, because that's what's really saddens me. What I see is a lot of people just bury their head in the sands for years and years sometimes because they're just so scared or whatever the reasons are. So I really hope that people listen to that and take that on board.
Yeah, definitely.
Um, So in terms of the IMA, so I know that obviously, like you said, it is more for like the money advisors than consumers, but of course it will still indirectly affect and impact the consumers in terms of IMA's work. So could you explain a little bit more in detail about what kind of you guys do and the impact it has on the average person?
Yeah, so as I've kind of alluded to, the IMA is a membership organisation. So our members are debt advisors who are working in a variety of settings. They might be working in a local citizens advice office, they might be working for their housing association or their local council, providing those debt advice services to people who need them. So the IMA's role is about upholding standards and quality in the money advice profession. So all of those people in all of those different workplaces are able to access the same levels of training, of quality assurance that will help them to do the jobs to the best of their ability. So the IMA is kind of in the background. I suppose if you're somebody who is thinking about getting debt advice from one of these places, then it's really about knowing that that individual who you're dealing with has access to this whole network of expertise and training and standards that allow them to give advice to a high standard. So it's really kind of a mark of assurance for you as the client to know that the advice you're getting is the best that it can be.
Yeah, it's definitely reassuring, and sometimes it can be really overwhelming for people when, especially if they're managing multiple debts. So knowing that person's like able to do the job to the best of their ability, is definitely reassuring. Um, so just moving on now onto kind of just debt in general, I'd love to kind of pick your brains about it. So a lot of our customers who use IE Hub are obviously struggling with debt. So I'd love to get your take on understanding kind of the common causes for debt, and then after that, strategies that you'd advise to kind of avoid falling into it in the first place.
Mm. Yeah, so I think the causes of debt, I mean, they are very varied. What we generally find is that kind of stereotype of people who get into debt just because they've overspent and they're not able to afford the repayments on all of their loans and credit cards and all of that kind of thing. That's increasingly rare now. Okay, we rarely see people who've just spent too much and are in difficulty because of that. The things that cause people to fall into debt now are more often life shocks. You might suddenly become unemployed, you might have an illness, you might have a bereavement, for example. And those kinds of things just kind of tip people over the edge financially because people's finances are so precarious these days. Hardly
Mm.
anybody has any savings. Then those kinds of shocks can cause what was a kind of difficult but stable situation to very rapidly spiral into problems. And that's where people start getting into difficulty. They start falling behind on bills and they start needing the help of a debt advisor.
Yeah.
And, we saw that on a big scale with COVID, didn't we? Very large numbers of people suddenly found that their income streams had dried up or they were having to take time off work or whatever. And that, tipped them into financial problems. And that's happening all over,
Hmm.
and that's one of the biggest causes of problem debt. In terms of strategies to avoid it, in an ideal world, all those things that I've talked about, savings and that kind of thing would be great if you had the means to do that. But we have to recognize increasingly that's very, very difficult for people.
Yeah.
So the best things to do are sort of making sure that you're on top of your finances in the sense that you're keeping an eye on where everything is going and how much you've got to spare, those kinds of things. And as soon as things start to unravel, as soon as you're detecting that things aren't going quite far enough, then get debt advice early
Yeah.
because generally speaking, as with any problem, the earlier that you seek help, the more options there are going to be to deal with it. So keeping an eye on your finances and making sure that you're aware of exactly what's happening is key, I think.
Yeah, and touching on the like you said about the causes, something that I see quite a lot, and a reason why we started this podcast in general was I think there's a lack of education. So when I went to university a few years ago, I had a student overdraft, and then I was like loving it. I was like, oh my God, £2,000 for free, like that's great. And then it graduated, and then the bank's like, we need this money back plus interest, and it just like shocked me, and I didn't realize. And I think it's because I just didn't understand debt and credit just in general. And it terrified me, and I didn't get a credit card for years afterwards because I was just scared. So, do you kind of see that as well as another reason of like kind of the lack of education?
Yeah, I mean, not to kind of criticize the whole premise of your podcast,
Mm.
but I think the financial education aspect is a little bit kind of overplayed. Yes, it would be great if everybody understood interest rates and credit agreements and all of that
Mhm.
kind of thing before they got themselves into that problem. I think that that definitely is something that
Mm.
we could do better. But I think so much of the problem debt issue now is societal, that
Right.
you don't necessarily want to go to a um to a place of kind of pointing the finger at individuals and saying, well, you didn't understand well enough about what you were getting
Yeah.
into, or you weren't, we talked about the responsibility point earlier, but I think it's a mistake to hold individuals accountable for what are bigger issues in society. The fact that the cost of living is a thing, and that
Yeah.
people can't afford to pay their basic bills. The fact that everybody's energy bills have gone up by 200% or more in the last couple of years. That's not
Yeah.
about helping people to understand financial terms and credit agreements. That's a bigger problem. So yes, education is good, and people should be encouraged to understand these, but that's not going to fix the problem on its own.
Yeah, and I appreciate that because it's called Pocket Perspective, so I like getting different perspectives on that topic. So I completely understand the much bigger picture. So I really appreciate
Yeah.
that. Thank you. So just moving on now, to kind of different debt solutions. So we find that a lot of people don't really understand them, and kind of what it is. So it'd be helpful if we have an expert break them down. So yeah, I was wondering if you could do that and maybe touch on like DMPs, IVAs,
Mhm.
bankruptcy. What's the difference between them all?
Yeah, definitely. Yeah, and obviously some of those acronyms, I think for a lot of your listeners, they'll be like, well, that's just a bunch of letters. What do they mean? So it's, and obviously we're very guilty of that in this job, using letters and throwing them out there and expecting people to understand them. The only profession I think is worse is teaching. My wife's a teacher, and she basically just speaks in acronyms all the time. And nobody else can understand them. So I think, yeah, breaking down some of that for people in who are not debt advisors is really helpful. I can't help
Yeah.
you with teachers, but I can help you with debt advisors, definitely. So yes, a DMP, which you mentioned, that stands for debt management plan, and that is the arrangement that I was talking about before, where you basically um, you work out what you can afford, you send that money to a debt management plan provider normally on a monthly basis, and they then share that money out among your creditors, the people that you owe money to. So you have one manageable payment to make every month, and it pays your debts down for you over a period of time. And clearly, that's a really good way of managing your money, because it's dependent on what you can afford, and it gives you a kind of something to aim for in terms of how long you're going to have to pay these things for, and then you're going to be debt free. So if you're wanting to become debt free in a manageable way, then that's a really good option for you. The kind of drawbacks to that, I guess, are if you don't have enough money to pay a reasonable amount to your creditors, then either it's going to take you a very long time to pay it off, or your creditors are just not going to accept that arrangement. And
Hmm.
that's the thing about the DMP particularly, is that your creditors have to agree to it in order for it to work. Otherwise,
Yeah.
they'll keep on adding interest, they'll keep on adding charges, and the amount you owe will go up, not down. So that's I guess the caveat to that. So um, other options that are available to you, and you mentioned again the letters IVA, which stand for individual voluntary arrangement, and that is a more formal type of plan that will allow you to pay your debts off over a fixed time frame. And it's normally 5 or 6 years, where you pay a monthly amount into your arrangement. That gets shared out amongst your creditors, and at the end of that period, whatever you have left over is written off.
Hmm.
So it's time limited rather than, you know, debt limited, if you like.
Right.
Now, an IBA is a type of what we call insolvency. So it is a formal legal scheme to write off some of your debt. So it's not something to be entered into lightly, and you should definitely get comprehensive debt advice about all of your options before you do it, because the sort of repercussions for you in the long term can be quite significant, particularly if you're a homeowner. You might end up having to remortgage, for example, you know, that kind of thing. So
Mm.
it's really important to understand what you're getting into before
Yeah.
you do that. Um, and I mean, if you don't have the money to pay on a monthly basis, because of course both DMPs and IVAs would require you to do that, then you have other options. Again, you know, formal legal insolvency options that will allow you to write off your debts. If you owe a lot of money, then you might consider going bankrupt, which basically means that your debts are written off, or your creditors are not allowed to pursue you for your
Hmm.
debts. But the flip side of that is that then anything that you own, any sort of assets you have, whether that's property, whether that's a car, for example, whether you know you have loads of oil paintings and antique pianos in your house, I don't know, but all of that is effectively up for grabs. So
Right.
the court, or an officer of the court called the official receiver, can sell that stuff in order to raise money for your creditors, and you kind of lose control of that. So again, not something to enter into lightly, and something you should definitely seek advice about before you do it. And there's
Hmm.
kind of almost a light touch version of that called a debt relief order, which is for people who owe relatively small amounts of money, and small in this context is less than £50,000.
Right.
Relatively few assets, so you're not a homeowner, you don't have anything particularly valuable, and relatively little sort of disposable income, so you don't have much money left at the end of the month to pay your debts. And if you meet those criteria, then you can, through a debt advisor, apply for a debt relief order, and that's basically a sort of 12-month holding period where your creditors are not allowed to contact you or take action against you, and then at the end of that period, then your debts are then written off.
Right.
So that's a really good option for a lot of people, the kinds of people who many of our members see, who are those kind of in that kind of low income bracket that we talked about earlier. You know, a debt relief order can be a really good option for them, because it gives them the opportunity to have that fresh start and not have the burden of debt hanging over them. So
Yeah.
those are some of the main options. There might be others depending on your situation. You know, there might be other things that your debt advisor can explore with you, but those are definitely some of the kind of the more common ones that we see.
Yeah.
And it gives you different kind of paths for dealing with your debt depending on your own circumstances.
But that's really helpful. Thank you. And in terms of, like you said, there's obviously consequences to each of them, and I imagine a pretty hard impact on like your credit score, for example. And I
Mm.
guess if someone's in really bad problem debt, the credit score is probably the last thing on their mind. But I did want to just touch on like the topic of like young audience. So in IE Hub, our fastest growing age group at the minute are like around 25-year-olds, which is quite shocking to me that so many people that age, which is my age, getting into so much problem debt. So for someone like that, potentially they might not have got a house yet and they want to save for a deposit, but then obviously these situations can impact their credit score. What would you say to someone who's like, I'm just so scared, I've got all this debt, and but I don't want to get into one of these solutions to impact my life for X amount of years?
Yeah, definitely. And I think your credit score is a really important one, because yes, as much as we in debt advice would like to say, don't worry about your credit score, you know, that's something that that doesn't really matter. I think, yeah, as you say, for people, particularly young people who have aspirations for things like, you know, home ownership in the future, it can be a big barrier.
Hmm.
And it's not just, you know, mortgages, is it? You know, it's so important for certain jobs, for
Yeah.
things like even getting a phone contract. You know, if you've got a poor credit score, then that becomes very, very difficult. So I
Hmm.
fully understand the reluctance that some people have. I guess the main message there is that actually your debt advice isn't on its own is not going to make your credit score any worse than it already
Yeah.
would be. If you're missing payments on things, whether you're doing that in a kind of structured way through a debt advisor, or if you're just doing it because you're juggling too many things and you can't manage, the overall impact is going to be the same. And actually, what debt advice can do is it can lessen the impact of that, or make it last for less time, because you're on top of it sooner. So
Mhm.
there's no way around it. Ultimately, if you're not paying everything that you owe in full every month, then you are going to get into difficulty with your credit score. That's just a fact of how our financial system works. But debt advice can make that easier and can help you rebuild quicker.
Yeah,
And actually, nothing on your credit score is forever. Okay, it all disappears
yeah,
after a set period of time anyway. So it's not like you're going to have a black mark against your name for the rest of your life. There is the opportunity to get that fresh start and to start rebuilding over time.
yeah. That's really helpful. Thank you. Before we conclude, is there any kind of points you want to make? Any final bit of advice for listeners before we stop?
I think really, just to repeat the point that I made earlier, if you are looking for debt advice, then it's really important to get it from the right place. Okay, you mentioned that you have a lot of young people who are, seeking help for yourselves, and I think that's a pattern that's reflected across debt advice in general. We do increasingly see lots of young people coming for help, and I guess the point there is, if you're looking on social media, for example, for advertising for these kinds of services, then make sure you know what you're getting into, because not all of them are providing a kind of an impartial, comprehensive service. Some of them are just trying to get you to go down maybe one or two of those routes that I mentioned before. So using things like the Money and Pension Service debt advice locator that I mentioned, or even just having a look round locally. If your local council offers any advice services or can signpost to them, then you know that you're going to be getting a comprehensive service and not just something that's making somebody some money. So that would be my main message, is just shop around and don't go with the first person that pops up on your on your social media or on your internet search, because they might not be the right service for you.
Yeah, well, thank you very much. That's amazing advice, and I'm sure that people will definitely take that on board. But yeah, thank you very much for your time today, Andy.
No,
Really
thank
appreciate
you.
that. Like I said, I'll link any links that you want in the description for people to find some good money advice if they do need to. But yeah, thanks very much for listening, guys, and I'll see you next week. Bye.
Yes.